2 million job losses and recession. Let's have a look. Hello everyone, Florian here and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this article from Fox Business, this time discussing, well, warnings of a recession for next year and significant job losses. So, brace for recession in 2023 as job losses top 2 million, Citi says. The Fed is likely to trigger a recession with its interest rate hikes, Citi economists say. I bet you everyone is really happy with what's happening in the States. Oh boy. And that's, don't kid yourself guys, that's going to flow over to many other parts of the world. It'll have an impact on Australia, not as much as China going into recession would have, but it certainly will. The US will likely tumble into a mild recession next year that sees unemployment top 5% according to a new report from Citi Global Wealth Investments. The group said in its latest Outlook report published this week that the economy could lose an estimated 2 million jobs as the jobless rate climbs to 5.25%. We believe that the Fed's rate hike and shrinking bond portfolio have been stringent enough to cause an economic contraction within 2023, the economist said in the report. And if the Fed does not pause rate hikes until it sees the contraction, a deeper recession may ensue. The Federal Reserve has been raising interest rates at the most aggressive pace since the 1980s in a bid to fight inflation. Policymakers have already approved 6 straight rate hikes, putting the federal funds rate into a range of 3.75 to 4%. From near zero in March. Although officials are expected to approve a slightly smaller 50 basis point increase at their December meeting, they have already signaled an appetite for a higher peak interest rate. The time for moderating the pace of rate increases may come as soon as the December meeting, Fed Chairman Jerome Powell said during a speech in Washington last week. Given our progress in tightening policy, the timing of that moderation is far less significant than the questions of how much further we will need to raise rates to control inflation and the length of time it will be necessary to hold policies at a restrictive level. But with inflation remaining persistently high, economists widely expect the Fed to trigger a recession with higher interest rates, which could force consumers and ultimately businesses to pull back on spending. Bank of America, Goldman Sachs, and Deutsche Bank are among the major Wall Street firms forecasting a downturn next year, although they remain uncertain about its severity. Fed policymakers have acknowledged the risk of a recession, but have warned that there's a greater risk in ending the tightening cycle too soon and allowing inflation to become resurgent. Powell has conceded that an uptick in unemployment could be the price to pay in order to lower inflation. Just, put up with the plebs, lose your jobs, you'll be fine. This is all such a mess, isn't it? The most recent inflation data and Fed minutes suggest the Fed is aware of these risks, the Citi economist said. Yet Fed's policymakers tend towards excess gives us pause as we plan for 2023. So there we have it, everyone. Let's jump over here and trading economics. Let's look at what the rates are right now in the US. We'll go to indicators, countries, United States. We'll look here at, let's look at their inflation rate. Their inflation rate, I think it's going down. So it's going down. So previous, so its actual was at 7.1 and it beat the consensus and the forecast. So that's good news. Now, did that impact the interest rates? So we can see here, interest rate. No, they jumped it up to 4% now. So the consensus was 4.5. Oh, no, sorry. The November rate jumped from 3.25 to 4%. 75 basis point increase, guys. 75 basis points. So now the consensus is a 50 basis point increase to 4.5%. Let's max out this chart. Okay, so the last time we're seeing a big run-up in rates then is just before the GFC. Awesome. Oh, look how low rates have been for so long. Look at that. Look how low they kept rates. They tried to creep them back up, couldn't do it again, flatlined it, and now they're just going nuts. They're creeping it up. It's gonna be like the 80s again, you reckon? Do you think we'll be like the 80s? Oh boy. What other indicators can we see? Let's look at the unemployment rate here. We've got non-farm payrolls. How did that go? Unemployment rate, so it's smack bang on 3.7%, and they're predicting unemployment heading up to, what was it in this article? What was it? 5.25%. That's a big jump from what we're at now. So the forecast for TE in December is 3.8%. So slowly creeping up. Let's go to max range. We can see that. I mean, that's just COVID. We can ignore that. That's when everyone got a holiday. But look there. I mean, unemployment's still very low. Very low. Look at that spike just after the GFC, 10%. Then you had in the 80s, jumped up. And if we have a look here at non-farm payroll, yeah, did it? No, it was worse than... Oh, no, it was better than the consensus in the forecast. It was better. So we'll have to see what comes out in December. So that's doing well. But guys, let's have a talk about this. So, US unemployment predicted to head up to 5.25%. The Fed's continue to hike rates and a massive recession. I can't wait to see this next election, the next presidential election, what's going to happen there. I mean, this is going to be painful. This is going to have flow-on effects to the rest of the world. So, what can we say? I mean, here in Australia, we just got to sit by and watch. We're just following the actions of overseas. Because if they keep lifting rates, what do you think our Reserve Bank is going to do? Do you think they're going to go, nah, she'll be right, mate. We'll just keep our rates low. Yeah, well, that'd be nice. Particularly if you're earning dividend income in USD as opposed to Australian dollars, but still, it'll force them to lift up the rates. Oh boy, this is definitely 2023 is going to be a year to watch, guys. It's going to be a year to watch. Let me know what you reckon. How high do you think it'll go? Do you think the Fed will pause? As always, check out my other channels, HeiseBim, HeiseSays International, for other topics that we discuss. And if you want to support us, you can financially on YouTube or Patreon, using our referral links, buying our merch, or calling us if you need an architect. Take care, everyone. Have a great day, and I'll see you in the next episode of HeiseSays. Bye for now.